So the big headline seems to be the Japan-US trade deal, and both the sides have agreed for 15% tariffs ahead of the August 1st deadline. Good morning and welcome to this Money Controls live stream. You're watching Opening Bell with me, Lovisha Darad. And while the India-US trade deal is hanging by a thread, Japan's trade deal is out with much lower tariffs of 15% than earlier announcement of 25% tariffs on auto. So you can see Japanese stocks and even auto stocks, all of them rejoicing on the back of that. So the likes of Honda, Toyota, Nissan, all of them surged in excess of 5% this morning itself. So Japan's auto exports to the US is quite significant, but the last month it did fall about 26% or so. So that could see some recovery on the back of this announcement, and that's the hope, and that's why you can see all of these auto stocks rejoicing in the trade today. But yes, Japan leading the Asia Pacific markets gain. We did see some trade deal announcements on Philippines too. So Asia Pacific markets have been rejoicing on the back of some uncertainty which is fading away. Coming to the US markets, that also closed mixed overnight. We did see that S&P 500 notched another record high, but Nasdaq Composite is where the weakness was felt. Some of the big tech earnings will be coming out today. Alphabet will be coming out with its quarterly performance today, so we'll be watching out if there is any upliftment in the Nasdaq Composite Index as well. But yes, coming back to home, no deal announcement for India yet, but the local news and the earnings reaction will continue to sway market action. We have seen a range-bound market, so stock-specific action, I reckon, will continue today as well. Now, we will be discussing about stocks that came out with its first quarter performance yesterday. Paytm swinging into profit. Then we had Dixon Tech reporting good numbers for the June quarter, and many more we'll be discussing on the anvil as well. We'll also be taking up your stock-related queries as usual, so keep posting them on our live feed. But before we delve deeper into the show, let's take a quick check of the top headlines, Sasa. United States announced a massive trade deal with Japan with tariffs set at 15%. President Trump terms it as the largest trade deal in history, which will result in Japan investing $550 billion in the US. Trump also announces trade deals with Philippines and Indonesia, setting 19% tariff rates. Meanwhile, third round of talks are now scheduled with China for early next week. Asian markets open higher as US President Donald Trump announces trade deal with Japan and the Philippines. US markets ended mixed overnight with S&P 500 notching another record close, whereas GIFT Nifty is indicating a positive start for our own markets. Crude oil prices fall more than 1% as persistent trade negotiations fanned fears about demand outlook. Gold, meanwhile, retreats from 5-week highs as investors book profits. And Prime Minister Narendra Modi is set to travel to UK today. The much-awaited UK-India FTA agreement is set to be signed tomorrow. Sources say that the Indian Prime Minister and the UK Prime Minister have been in close touch since the announcement of the trade deal. And coming to key earnings today, we have Infosys, which will be reporting its June quarter performance. It is expected to report about 3.2% dollar revenue on a quarterly basis, while Dr. Reddy's is set to report about 6% rise in profit from a year ago. Also, do watch out for numbers from Tata Consumer Products, as company is set to report 11% rise in revenue. All right, we have been seeing a range-bound market in yesterday's trading session. If we did see, the Indian markets did end on a flat note, and Nifty traded sideways for the better part of the day as well. But yesterday it did end with a marginal loss below that 25,100 mark. And if you look at the broader end of the markets, no support came in from there too. All of the sectoral indices also slipped in the negative territory, and we could see pharma and of course the realty pack emerge as the worst sectoral performers in yesterday's trading session too. But yes, coming to today's key earnings, we'll be watching out for the large cap IT name Infosys reporting its first quarter results. So far, the tier 5 IT giants have reported certain, pressure due to the weak discretionary spend. So we'll watch out for Infosys numbers too. Midcap IT names will also be reporting their numbers. Coforge and Persistent Systems will be reporting the June quarter results. Apart from that, Dr. Reddy's and Tata Consumer are some of the other names too on Q1 results today. But yes, coming to the fund flows data, FIIs have stood as net sellers in the last trading session, selling about 3,500 crore rupees in the cash markets. They have been net sellers this month itself. So yes, we can see that the negative sentiment is quite persistent so far from the FI perspective. But yes, DII is trying to offset the negative sentiment by buying larger quantum of stocks, which was worth about 5,200 crore rupees in the cash markets. Coming to the Nifty put call ratio, that has fallen to about 0.84 from 0.96 levels in the previous session, and the stock which has been added to the F&O ban list, that is your IEX, and the stock that continues to be a part of the list, that includes the likes of Bandhan Bank and RBL Bank. Now, just a couple of minutes before we go to the open, but let's take a look at how the pre-open rates are looking at this point. Sensex up about 250 points and Nifty also doing well above that 25,150 levels. But yes, a range-bound market, that is what is expected. But however, given that the US trade deal has been announced with Japan, the Asia-Pacific markets were doing good on back of that. Now, let's on that note, let's quickly get on board with our technical expert of the show. Joining me is Nilesh Jain, Head VP Derivative and Technical Research of Centrum Broking. Nirav, how does the markets look like? Yesterday we were slipped below that 25,100 mark. Do you believe we can defend 25,000 going ahead?
Very good morning to you, Lovisha. Absolutely. So yesterday, in fact, we did see a gap up opening, but soon after that, the profit taking track Nifty near about 25,050 odd levels. Good part is that we have cluster of support at 25,050 DMA, as well as the psychological support is also placed at 25,000. On derivative front, if you see the data as well, 25,000 on the put side witnessed a fresh put writing yesterday. So looks like we are likely to defend those levels at least for this expiry point of view, this week's expiry point of view. And on the upside, 25,200 is kind of acting as a steady wall. We need a decisive breakout about 25,200 for any possibility of a short covering rally towards 25,400 to 25,500. But yes, it's more sort of a consolidation that you have rightly pointed out. We are expecting Nifty to oscillate in the range of 25,000 to 25,200. That's the 200 point trading range from intraday point of view. As well as going forward, whichever side it will break, we can expect a decisive move in that particular direction of 200 to 300 points. Looking at the volatility index, India Weeks, which fell yesterday by 4% to end below 11 at 10.75, it is very much in the comfort zone for the bulls. And the overall VIX is not indicating any sort of a major crack from here. Now coming to Bank Nifty, yesterday we did see kind of a sell-off across all indices. The broader markets were also under pressure. The Bank Nifty also witnessed a bit of underperformance compared to the Nifty index, but the structure-wise, Bank Nifty is still looking positive. Till the time it doesn't break below 56,000, the outlook remains positive with a buy and decline strategy. But for the day, I would rather focus on sectors and stocks rather than index.
Okay, but yes, India wicks comfortable levels. That is a good sign for the bulls going ahead. What about the broader end of the markets? How do you believe the trade to go from the mid-cap and small-caps perspective, Nilesh?
See, broader markets, we are likely to witness this possibility of a further consolidation to continue. Yesterday, we did see small cap, mid cap, both the indices traded under pressure, similar to the benchmark indices. So, some bit of underperformance, yes, that cannot be ruled out because in this kind of consolidation, we are likely to witness a shift in the focus towards large cap over mid and small cap. So some bit of consolidation is something that we are expecting is likely to continue. And just one more point I want to highlight. As of now, the FIIs have a short position of 86% in the index. In terms of contract, over 1.5 lakh contracts are on the short side. So there could be possibility of a huge amount of short covering that is very much due. Historically, we have seen whenever FI long short ratio inches closer to 14%, 13%, that basically triggers a kind of a 500 to 1000 point rally in the Nifty index. So given this kind of a setup where the markets are slightly oversold, there could be possibility of a short covering move, and even in the broader market, there could be possibility of a pullback.
Okay, short covering move, that is what we need to watch out for as well. Nilesh, what about the Nifty Pharma Index? Yesterday the index was witnessed quite a bit of a selling pressure. Even from the start to the end, the Nifty Pharma Index did not do well. So down for the third straight day. How do you view Pharma Index on the back of some of the results which will be announced today as well? Dr. Reddy's on the anvil.
Right, Lovisha. So structure-wise, if you pull up last 3 months chart, you can clearly see the pharma index is gradually inching higher, forming a high top and high bottom formation. So that means The swing low this particular index has formed, Nifty Pharma Index is somewhere around 22,000. Currently, it is at 20,300. So from here, there is another possibility of another 100 to 200 point fall in the Nifty Pharma Index that cannot be ruled out, but that can be a good opportunity to start accumulating the quality pharma stocks. Names like Divi's Lab, maybe Sun Pharma being a heavyweight from this particular space that can also be added on declines. So selective focus should be there in the pharma space. Broader structure for the Nifty Pharma from a positional point of view looks positive. But yes, looking at the immediate trend, looks there could be possibility of another round of selling going forward to continue.
Another round of selling could be possible for pharma index. Let's also talk about Nifty Metal Index because that is showing a little bit of an optimism. However, it did succumb to some of the selling pressure which was there in the market yesterday. Nilesh, any take on the Nifty Metal Index? How do you expect the near term to pan out for it?
See, Lavisha, we have a slightly positive outlook on Nifty metal space. We have already covered this particular space with our client. We are little bullish in the Nifty metal space from a short-term momentum perspective. As far as Nifty metal index is concerned, which is currently at 9,530 odd levels. So here, if you look at the support, which is placed at 9,300, and we are expecting a momentum towards 9,800 to 10,000. So within this space, couple of stocks that we are liking. First of all, Jindal Steel and Power (JSPL). We are bullish on this particular stock towards 985 to 1000 plus kind of level from a short-term perspective. 935 should be the stop loss for the long position. Apart from that, Hindalco, within aluminum space, Hindalco and Nalco, both the stocks are looking positive. As far as Hindalco is concerned, we are expecting a short-term momentum towards 710 to 730 on the upside. With a stop loss below 670, Hindalco can also be bought on declines.
Hindalco stock to be bought on declines, but let's take one stock in focus, that is your Paytm, because the company did post its first ever profit of about 122 crore rupees in the first quarter. So this was a sharp turnaround from a loss of about 839 crore rupees in the quarter last year. And even if you look at the profit, that's supported by a rise in the other income, and revenue has also grown by about 28% on a year-on-year perspective to about 1917 crore rupees. Other brokerages have reacted; they're quite positive on the counter. If you look at Jefferies, they've upgraded the counter to buy, and they've raised the target price to 1250 rupees per share. They believe that they expect that the continued profit growth from revenue upside and operating leverage, and they believe that the valuation is at a discount in comparison to PB discount, so that offers some compounding returns going ahead. Another brokerage firm, Citi, has also given out a buy rating on the counter, and they've raised the target price to about 1215 rupees per share, and they believe that the merchant business is performing quite well while the consumer business recovery is underway. On the other hand, if you look at Bernstein, that has also given out an outperform call. They believe that the future profitability will be dependent on the sequential revenue growth. But yes, past 1 month, from a stock perspective, it has been good for Paytm, up nearly 20%. Nilesh, what can we expect for the near term, and of course, any target levels that you're watching out for?
Well, Lavisha, a very good set of numbers, and certainly we are witnessing a positive move on the back of that as well. In fact, we have already seen a good momentum in last 5 consecutive weeks. Now, this has been the fifth consecutive weeks of gain for this particular counter, and so far in this week, we have seen a spurt of over 5%. And if you just pull up the Paytm chart since listing, you can clearly see this is the first time after 2021, almost after a span of 3.5 years, the counter has taken off its important level of 1070 today. Now, looking at the overall setup, we are expecting a follow-up move to continue towards the levels of 1200. 1150 to 1200 can be a short-term target for this particular counter. But we are not advising to buy after a gap up opening of over 3.5% today. Not advisable to chase at high level because the risk and reward is not favorable. But for those who are already holding the long position, can continue to ride this particular momentum towards 1150 to 1200, and a fresh entry can be done on declines, and stop loss for the long position should be placed somewhere around 1040.
Okay, all right. 1200 levels. That means that another 10 or 11% upside we could see on Paytm as well. All right, just less than 15 seconds to go before we hit the open. But yes, anything interesting that you're also finding on the charts, Nilesh? Just a quick takeaway before we hit the open.
Something that is looking positive in insurance space. So HDFC Life, SBI Life, in fact, watch out for these particular counters. We are bullish for HDFC Life for further momentum towards 775 to 780 from a short-term perspective. 740 should be the stop loss.
Okay. Okay, all right. Insurance space that we need to watch out for. But yes, we are opening on a positive terrain. Nifty up about 0.3% above that 25, 150, 140 levels. So yes, we have started off positive, but we'll watch out whether or not we, sustain this positive momentum of the above that 25, 100 mark. But yes, Sensex also opening with about 265 points gain. 0.3% gains coming in from the Sensex perspective too. If you look at the mid-cap index, that is also indicating a flat trade, but however with a positive bias for the mid-cap index. Let's take a look at the small caps, how they have been doing. Small caps have slipped into the negative territory, about flat with negative bias coming in from the small caps perspective. On the other hand, Bank Nifty has opened in the green once again with about 0.1% gains. Nifty Auto seems to be doing well with about 0.4% gain. We did see that Japanese auto stocks have been doing quite well. So we can see, maybe a little bit of a rub-off effect on the Indian stocks as well. 0.3% gains coming in from the Nifty Auto Index. If you look at Nifty Oil and Gas, which has been succumbing to some of the selling pressure, has opened up in the positive territory, but very slim gains from a sectoral perspective. On the other hand, India VIX continues to remain in depressed levels, like Nilesh was talking about, that any comfortable levels of India VIX could indicate that some bullish sentiment would be prevalent in the markets. Let's now take a look at some of the large cap gainers and movers. The first one is your gainers, that is your Bharti Airtel, topping chart with about 0.8% gains. Other than that, we can see Tata Motors doing well with about 0.7% gain. Maruti Suzuki, Shriram Finance, also some of the top gainers on the Nifty 50. Now let's take a look at some of the losers. ONGC on the with about 0.2% decline. Hero MotoCorp, Tata Steel, also some of the losers on the charts of Nifty 50. But yes, advance decline ratio, we can see that the advances have taken an upper hand in this market, but we'll watch out, if this recovery sustains throughout the day also. Let's take a look at how Paytm has been doing after the good performance. It's opened with about very slim gains, 0.1% or so. Right now, we'll see whether or not this extends throughout the day. Let's take a look at how Dixon Tech has been doing, because that also reported some good numbers for the June quarter. We did see that the revenue has jumped about 95% on a year-on-year basis. Now, this is the first sub 100% top line growth in 5 quarters, but yes, net profit has surged about nearly 70% on a year-on-year basis. So yes, Dixon Tech doing well on back of that, 1% gains coming in there. Let's take a look at how some of the brokerages have reacted. Nomura has given out a buy call on the counter, and CLSA has given out a high conviction outperform call on the counter, because they believe that the future growth is expected to come from Vivo GV joint venture, exports and other segments too. Management commentary has been also quite bullish on the back of FY26, and they believe that mobile components is expected to surge going into in the upcoming fiscal year. But yes, how the stock has reacted so far this year, the stock has been underperformer. Today the stock has been doing well, but so far this year on a YTD basis, the stock has declined about 6% or so. Nilesh, what is your outlook for Dixon Tech? Anything that you're watching out for?
We have seen a decent correction over the period, but now if you see last couple of months, the stock is making an attempt to witness a sharp rebound from the lower levels. In fact, if you just pull up last 6-month chart, the stock has also given a good breakout from its triangle formation. In fact, the breakout came yesterday itself. So structure-wise looks positive. A gradual up move is something that we are expecting in Dixon Technology, and short to medium term target comes somewhere around 17,200 to 17,800. Buy on decline should be the strategy in Dixon Technology. It is trading well above all long term and short term moving averages, so that itself shows that there is a positive undertone in this particular stock. 15,600 is acting as a very strong support. That should be the stop loss, and we are pretty bullish on this particular counter towards 17,200 to 17,800.
That is the view coming on Dixon Tech. Let's also address Colgate. The stock has not been doing well. We did see an earnings miss for the June quarter on all parameters. Net profit fell for about 12% on a year-on-year basis. Top line also saw a contraction of about 4.2% decline. EBITDA also declined about 11% on a year-on-year basis, and margins narrowed by about sharply with about 240 basis points. Majority of the brokerages have also retained their reduced call on the counter. HSBC have given out a hold call on the counter, and they've cut the target price to about 2,600 rupees per share. They believe that the EBITDA margin declined as the company controlled the A&P expenses, and of course Nomura has also given out a reduced call on the counter, and they believe that weak demand and high base drove the volume decline going ahead. But yes, the stock has not been doing well, and so far this year also, the stock has been an underperformer. It has declined about 13% or so. Nilesh, for Colgate Palmolive, do you expect the pressure to continue? What kind of fall are we anticipating?
Absolutely. Right. So Colgate Palmolive, one of the underperformer within the FMCG space, it has a very weak structure on the technical front. The counter is constantly witnessing a downtrend, forming a lower top and lower top formation as well. So yesterday, post numbers, we did see a negative impact in this particular counter, and today we are witnessing a structural breakdown. So looking at the overall structure, it looks like it is heading towards 2250 to 2200 on the lower side. So sell on rise kind of structure, it is not advisable to take any contra bet as of now. Better to stay away from taking any sort of long position in this particular stock from a short term perspective.
All right, let's also address some of the viewer queries that is dropping on our live feed. The first query coming in from Naveen is asking what is the fresh entry levels for Bharat Electronics. Past 1 month, the stock has entered into a consolidation mode, but so far this year the stock is on a structural uptrend. Nilesh, anything that we need to watch out for Bharat Electronics? Any fresh entry levels you would advise?
See, if somebody wants to play a momentum or a pullback from here, yes, a long position can be initiated at current level, keeping a stop loss below 395. So 395 was the recent, in fact, 391 precisely. This particular level is acting as a very strong support. So we can expect a pullback move towards the levels of 415 to 420. So purely from a trading perspective, a long position can be initiated at current level. From a positional perspective, I think one can accumulate this particular stock over the period. We can expect a gradual up move towards 450 to 460 kind of levels on the upside. So structure wise, yes, these are the good levels to make a fresh entry.
Okay, good level to make a fresh entry at this point. Then Naveen is also asking the view on Titan. His average price is about 3600 rupees, and he's asking whether he should hold, exit, or average at this point. Yesterday we did see the stock did well, but today once again it has fell with about very flat in the red at this point. Nilesh, anything on Titan?
See, Titan, in fact, if you see this particular counter recently formed a short-term base near about 3360, 3370. So that level is acting as a very strong support. That's the 200-day moving average support as well for this particular stock. So if somebody wants to play from a short-term trading perspective, then yes, we can expect a pullback towards 3550 to 3600. But gradually, if somebody has a time horizon of more than 1 year, then these are the good levels to start accumulating. Averaging can be done, but wait for further dip towards 3350, 3360. If it comes in that particular zone, that's a good entry point in terms of averaging. And existing long position can be held with a stop loss below the same, and we can expect a gradual up move towards 3600 to 3650.
Gradual up move to 3600 for the stock Titan that we'll need to watch out for. Let's take another viewer query. Bharat is asking the view on Tata Motors. The stock seems to be doing quite well today, 2.5% gains coming in there. But yes, from June to July, the stock has been oscillating about 600 to 650 zone. Nilesh, anything that we need to watch out for? The stock is up today.
Right today, in fact, Nifty Auto Index itself is up over close to 1%. And if you see, two-wheeler space is doing well, specifically Bajaj Auto, TVS Motor are the stocks that are looking positive. But coming to Tata Motors has been one of the underperformer within the auto pack. Some pullback, and this pullback may extend towards 700 to 720. So from a trading perspective, these are the good levels to make a fresh entry, keeping a stop loss below 670. One can play pullback towards 720 to 730 on the upside. Again, if somebody is looking to make a fresh entry from a longer term perspective, then too it looks attractive at current level. We have seen a decent correction all the way from the levels of 1165, and currently it is at 700 levels. So over a 50% correction we have already seen. Now the stock is making an attempt to rebound and witness some bit of recovery in this particular stock. So yes, looks positive at current level from a risk and reward perspective.
Okay, all right. Current level looks attractive for Tata Motors. Let's take a another viewer query. Sandeep is asking the view on Tech Mahindra. What is the near-term levels that can watch out for? Nilesh, anything on Tech Mahindra, because the company did deliver Q1 results which disappointed investors, and the stock is down about 7% in the past 1 month.
See, Nifty IT space as a whole is not doing well as of now. Today, Infosys will come out with the numbers. We need to see how that will impact the Nifty IT space. But as of now, overall, the broader structure of the Nifty IT index is looking most kind of sluggish as of now. So it's an avoid taking any contrabet in IT space as of now. We are as of now cautious on the IT space as a whole. But Tech Mahindra, as far as the stock is concerned, has a strong support at 1500. Keep a stop loss at 1500. If you want to stay put, then that should be a stop loss. Any pullback towards 1600 to 1650, use that pullback to exit from the long position.
Okay, exit from the long position. All right, let's take another viewer query then. Priya Pratap is asking the near-term target levels for Eternal. She's bought the stock at 270 rupees. Of course, in the past 3 days, the stock has seen a good momentum on the back of its first quarter results. The stock is doing well in today's trading session, and in just 3 days, it's up about nearly 17% or so. Nilesh, what are the next target that you're watching out for Eternal?
Well, very strong setup can be seen in Eternal, and we have seen a very strong set of numbers in this particular stock as well. A big gap up opening was seen yesterday. Today we are witnessing a follow-up move. In fact, it has hit a new record high as well yesterday. So overall, looking at this setup, we are expecting a follow-up move to continue towards 325, 340 levels on the upside. So further momentum can be seen in this particular stock. Keep a trailing stop loss in order to protect your capital and appreciation both at 292. So that should be your trailing stop loss level. And one can ride the momentum towards 320 to 345 on the upside from a short to medium term perspective.
Okay, 345 rupees from a short-term perspective for Eternal. Let's take another viewer query. Soumya Reddy is asking the view on Garden Reach for the next couple of weeks. From May to first half of June, the stock did well, but now it's entered a consolidation mode. Nilesh, anything that we need to watch out for the next couple of weeks?
We are witnessing this short-term momentum on the lower side. The counter, after hitting highs over about 3400, is slightly moving lower, constantly forming a lower top and lower top formation as well. So looking at the short-term structure, looks like it is heading towards 2550 to 2500 on the lower side. Although the momentum indicators and oscillators have gone into extremely oversold territory, there could be possibility of a pullback, but do not expect any V-shaped kind of recovery in this particular space. In fact, this space is witnessing a bit of selling pressure at the high levels. So better to stay away from taking any contrabet. If you have already bought it, then keep a stick stop loss at 2580 for the long position, and exit on pullback should be the strategy if bought it purely from a short term perspective.
Okay. All right, that's the view coming in on the counter. Let's take another viewer query. Satya is asking the view on Saga Cement for a fresh long position. Saga Cement's past 1 month has been doing quite well, and so far this year also the stock has been in the green itself. What is the next target that we need to watch out for Saga Cement, Nilesh?
Well, Saga Cement, which is currently trading at 257 level, and if you see the structure of this particular counter, it is constantly witnessing a bit of selling pressure recently. But if bought it purely from a positional perspective, it has a very strong setup from a positional perspective. This decline, in fact, giving a good opportunity to start accumulating this particular counter. If at all it falls in the range of 240, 230, that can be a good entry point in terms of making a fresh entry. If already bought it, then keep a stop loss at 235, and gradual up move towards 275, 280 can be seen in the near term.
Okay, all right. That is the view coming in Saga Cements. Let's take another viewer query. Abdul is asking the view on Polycab India. Polycab India, June lows, the stock is up about 18%. Strong first quarter performance, double-digit growth from top line and bottom line as well. Nilesh, what is your view on the counter? How much of an upside can we watch out?
From a short-term perspective, the counter has reached the over territory. Recently, we have seen a good momentum in this particular counter. In fact, this has been the fifth consecutive weeks of gain, a months of gain, I would say. So in this particular stock, so some bit of profit taking that cannot be ruled out. But purely from a positional perspective, it's a good portfolio stock, and we can expect the levels of 7,400 to 7,600 in next 4 to 6 month kind of time frame. But as of now, at current juncture, it looks like there could be possibility of some bit of profit taking, which can drag this particular stock towards 6,800 to 6,700 as well.
Okay, some profit booking could be on the anvil then. Let's take another viewer query. The banker is asking the view on Paradeep Phosphates. The stock has been doing well from the past 1 month, but from a near-term perspective, Nilesh, anything that you're watching out for Paradeep Phosphates?
It has been in a very strong uptrend. In fact, post listing, we have seen a good momentum in this particular stock. So structure-wise, yes, still looks strong. If already bought it, then keep a trailing stop loss at 182, and one can ride the momentum till 200 to 210 from a short-term perspective. Since we have already seen a spurt of over 12% this week itself, so not advisable to chase at high levels because the risk and reward is not favorable. So in terms of making a fresh entry, avoid taking any sort of aggressive long position at current juncture. Wait for some meaningful decline towards 180. That can be a good entry point. But existing long position can be held for 200 to 210 on the upside.
Okay, all right. That is the view coming in for Paradeep Phosphates. Let's also address one stock which is buzzing in trade, United Breweries, with about 1% gains. We did see that the company has reported its first quarter performance with net profit modestly rising about 6.4% on a year-on-year perspective, and revenue grew about 16% on a Y-on-Y basis. The stock is once again trying to build up its momentum, which is up about 5% so far this month, and today also the stock seems to be doing well. Nilesh, anything that we are watching out for United Breweries?
See, in last 1.5 year, the stock has traded in a very tight range. 2200 level on the upside has acted a very strong resistance zone for this particular counter, and 1800 has provided a strong support as well. So that's the broader range of close to 400 point in this particular counter. We are not expecting any major move on immediate basis, although we have seen a bit of attraction today, and this pullback may extend towards 2150 to 2200 at max. But I would advise to refrain from taking any sort of aggressive long position in this particular stock as of now. Purely from pullback perspective, somebody has already bought it. Then one can keep a stop loss at 2020, and upside may extend towards 2100 to 2150.
Okay, all right. That is the view coming in for the counter. Let's take another viewer query on that note. We had a viewer query on 360 WAM. 360 WAM, the stock is not doing well today, but yesterday also we did see a block deal where we saw that BC Asia Investments have offloaded about 5% stake or so. From a near-term perspective, what is your view on the counter, Nilesh?
Lovisha, you are talking about 361, right?
Yes,
Which
yes,
is currently
361
trading at
WAM.
what? Right, 1132 level. So if you just look at this particular stock, recently we have seen some bit of profit taking. There was a volume and price spurt a couple of days back, but today looks like it is witnessing a bit of profit taking. So if you just look at from a positional perspective, any dip from here can be a good opportunity to initiate a fresh long. In terms of making a fresh entry, 1050, 1080, that's a good range to make a fresh long. But if somebody has already bought it, then keep a stop loss at 1120. That's the immediate support for this particular counter. From a short-term perspective, is not looking that attractive, but yes, from a positional perspective, buy and decline should be the strategy.
Buy on declines will be the strategy for 361 WAM. All right, just one last question before we let you go, Nilesh. What are your top picks at this hour? We are seeing Q1 earnings season unfold and, of course, a range-bound market, which is quite prevalent.
Right, Lovisha. So, couple of stock-specific action is something that we are focusing. So, couple of stocks that are on our radar on long side. So, first of all, we did mention about auto space. We have seen a good momentum in the Nifty auto pack as a whole. So, Mahindra and Mahindra is something that is looking positive on the chart, and we can expect a follow-up move to continue towards 3,340 to 3,380 levels on the upside, with a stop loss below 3,245, 3,245 should be the stop loss, and 3340, 3380 kind of levels can be can be seen in the Mahindra and Mahindra this particular counter. Apart from that, another stock, that's the broking counter Angel One. We are witnessing a strong pullback in this particular counter. So this pullback may extend towards 2,900 to 2,930 on the upside. So then that pullback can be played keeping a stop loss below 2,800. And yes, Angel One looks positive purely from a pullback perspective.
All right, those are the stocks that we need to watch out for. But with that, we have to let you go. Nilesh, thank you so much for your time and joining us.
Thank you, Lavisha.
All right, let's take a quick check of the markets. We have trimmed some of the gains that we had earlier in the day. Sensex is now up about 170 points and Nifty is also above that 25,100 levels. So yes, we are defending that 25,100 levels at this point of time. Some of the index movers, Nifty Auto Index soaring in the trade, top sectoral winner at this point with about 1% gains. On the other hand, what is also doing well, that includes the likes of your Bank Nifty Index, positive in the flat but with a positive bias. On the other hand, Nifty Metal Index also building onto a gains of about 0.4%. On the other hand, what is limiting the upside, that includes the likes of Nifty Media Index with about a percent loss. PSU banks have taken a back foot at this point and broader end of the markets. Not much participation coming in from there too. But yes, on that note, let's quickly move on to our next guest of the show. We have Manoj Bahety, founder and fund manager of Carnelian Asset Management, joining us. Manoj, good morning. Japan's trade deal is out, but nothing on India. So the deal is also unlikely before August 1st deadline. What is your assessment of how the markets are sensing the tariffs will settle?
Good morning, Lovisha, and good morning to all your viewers also. I think on tariffs, means we are quite positive. The way I think the negotiations are happening and the way US has also taken a pause or again deferred the deadline of increasing the tariffs. I think India is one of the very serious trade partner for US, and so we are quite hopeful that in terms of the trade deals, not only with US, I think we will see a series of trade deals. Means already India has concluded some trade deals with UK, and US, I think, is going to conclude very shortly. And going forward, like we will also have trade deals with the European Union. So I think in terms of trade deals, we are quite positive, or we are not expecting a significant increase in tariffs on goods imported from India. And I think India has taken its stand in terms of like whatever the critical sectors, critical areas are there. There, I think India will take its stand. So we are quite hopeful on that, Lavish.
We're quite definite about the trade deal at this point. But yes, so far this month, Manoj, FIs have been net sellers. How do you see the flows to pan out now that the trade deal with Japan is out, but there's no sight for India so far, at least for now?
So I think, Lovisha, if you see last 1.5, 2 years, I think the dominance of FIIs in India's equity market, I think it is going down with every passing month, with every passing quarter. The way we are seeing strong flows of the domestic liquidity and domestic liquidity supply, I think the domestic liquidity has become a bigger factor than the FII flows. In fact, gone back are the days when like a slight selling from FIIs have created significant kind of impact on the market. So the way we are seeing, like if you see SIP, if you see the new mutual fund NFOs, if you see the kind of money which has been raised by PMS, AIFs, and even many of the large family offices. So the kind of domestic liquidity which is there, and I think sooner or later, I would put FIs into two broad buckets. One are like hedge funds or FIs who want to make like quick gains and who want to trade in India market. They may come in and go out. But long-term investors, be it FIs and DIIs, I think they are quite resilient on India and they continue to remain invested in India.
Okay, all right. DII is apparently taking the call from here on right now. But yes, Manoj, what is your early reading of the first quarter earnings? Do you believe that the early bird results support the FY26 double-digit earnings growth expectations going from here on?
Absolutely, Lovisha. If I see, till now, we have seen some results on the IT sector. We have seen results on the BFSI. So on the BFSI sector, if you see overall systematic credit growth, it is around 9%. But if you look at like few of the private sector banks which has reported numbers, their credit growth is in the range of 12 to 13%. There has not been a big negative surprise on NIM, though we expect in Q2 there will be some softness in NIM. And once it settles down, I think in S2 of this year, we will see good amount of credit growth coming back to the system. supported by adequate liquidity in the system as well as lower interest rate. And in fact, both banks and NBFCs are going to play a big role in supporting this credit growth. And also one other thing, I think one of the concern which was there that there will be some kind of issue on unsecured personal loans. If I look at the asset quality of the banks who have reported the numbers, we are not seeing that kind of issue at all. The asset quality is pretty good. We are not seeing any kind of stress building up, especially on the personal loans. Only one of the segment where we are quite watchful is the microfinance lending. I think there we will have our cautious stand. Otherwise, on the BFSI, I think decent set of numbers with second half of this year going to be much better than the first half. Now, IT sector, if I look at it's a mixed set of numbers. Deal wins were pretty strong. But in terms of execution of the deals into revenue, I think there we are seeing some kind of muted response, mainly because I think still the Western world companies are still waiting or watchful of the outcome of the tariff. So I think there is some delay in terms of decision making on the discretionary expenditure. And if I look on the margin side, I think margin side IT companies have done a decent job. So again, if IT sector, I would say 1 or 2 quarter, there may be some impact on the execution. But I think second half of this year onward, there also I see good momentum as the deal wins, which has already happened, start converting into revenues. So I think these are the few early trends of the results. In fact, a few of the new age companies have also reported numbers. Numbers were pretty decent. Yesterday, we have seen a couple of results from the new age companies. There also, we have seen the positive surprise on the results.
Okay. Okay. Manoj, what about the mid-cap IT stocks? Because you did say about the large caps one, the tier one, where they faced, of course, the deal signings were delayed, and of course, there was some weak discretionary spends also. But how are you positioned on the mid-cap IT numbers? Because today we have Coforge and Persistent, which will be delivering their June quarter results.
I think both the companies are exceptionally good in terms of execution, in terms of converting the deals to the revenues, and in terms of upward margin trajectory. So I think in the mid-cap IT space, one needs to be very, very selective. While choosing stock, I think one need to choose those stocks only which have got ability to adapt themselves in the changing environment of AI and machine learning. And I think both the companies which you have mentioned, I think they are quite comfortable in that space. So in mid-cap IT space, we would rather play selectively. And within IT space, we are very, very positive on the ER&D space, especially because on the ER&D space, we are seeing a large opportunity size. And in fact, there are handful players. And I think this is one of the sector which is likely to be less impacted on account of AI adoption.
Okay. Okay. Let's also talk about banking sector, Manoj, because you did touch upon that you're quite bullish on the BFSI segment. But banks in specific, for both the managements, HDFC and ICICI Bank did indicate that they expect range-bound margins for the rest of the fiscal year because of the rate cut impact. How do you see both of them, and of course the entire banking bank position for the entire fiscal year? Do you expect good, comfort there for investors in terms of run up? And how do you see the entire pack? Because even we saw Axis Bank reporting a little bit of a technical impact.
Absolutely. So, Lovisha, I think the banking sector, if one looks at, I think margins are at a good level right now. One should not expect any uptick on the margins. In fact, in the second quarter, there will be some softness in the NIMs because of the recent repo rate reduction. And this softness, once that the deposit and liability gets repriced, that will get neutralized over next 3-4 quarters after the second quarter. But if one has to play the banking sector, I think this sector has to be played for the credit growth. With benign liquidity condition, with lower interest rate, we are expecting good amount of loan growth returning to the system. And because of this loan growth, we are also seeing good amount of growth in the non-interest income or the fee-based income of the banking sector. So I would say that it is more a play on growth, credit growth, rather than the margin improvement. In fact, if the margin is stabilized after Q2, it will be a good news for the banking sector because the credit growth will take care of the profitability growth supported by operating leverage.
Okay, okay. Manoj, you also touched upon the new age companies. I want to talk about like Eternal because that is the talk of the town right now. 3 days of consecutive gains we are seeing on the counter. Strong management commentary and Blinkit also outshining the food delivery impressed the street. But profits that have taken the hit. So how sustainable do you think these business models are, including Swiggy's, where profitability comes at the cost of expansion?
See, I think if I look at this sector, in fact, I think if you talk about Eternal and Swiggy, earlier these guys were mainly a food delivery and now they have migrated successfully to quick commerce. And the way Eternal has managed to reduce the losses on the quick commerce side, that was one of the surprise. And I would say that there is a large opportunity size, especially on the quick commerce. But I think two, three things needs to be cautiously evaluated before taking a call on these players. In fact, one is that the kind of cash burn and the kind of funding which the competition has. So I think last quarter, apparently, it might have happened that the competition in this space has reduced the cash burn, and that might have resulted in improvement in margins. And means still, I think these companies they are present only in tier one cities. They have yet to expand to tier two, tier three cities. So two things which needs to be evaluated carefully: the kind of cash burn which the competition will continue to do, and secondly, how successful this model will be in tier 2, tier 3 cities, because I think the opportunity size for this segment will be dependent on the success of this model in tier 2, tier 3 cities. But the opportunity size is really big. And I think the way these guys have executed, that is, I think, really commendable.
Okay, okay, all right. Manoj, everyone is expecting a consumer recovery, at least in the second half of this year, but valuations have run up. Do you believe that there's still meaningful upside left in the sector?
I think consumer sector I would rather play selectively, like consumer sector where I would say the growth justifies the valuation. In fact, on the consumer sector as a whole, I think two things which will favor the consumer sector this year, particularly. One is that the liquidity in the system. Second is, I would say, even the impact of the tax rate cut which the government has announced, that is yet to it means yet to go in the hands of the taxpayer, and that will eventually come and get spent on the consumer basket. And the third thing is that means the monsoon is across the country is decent. So I think this will not only support the consumption on the rural side, but also on the urban side. So I think we are quite positive on the consumption sector as a whole picking up this year, particularly second half of this year. And the other thing which is favoring the consumer sector is that benign raw material prices, because till now the consumer sector was means most of the companies were struggling because of the high raw material prices, subdued consumption, and they were not able to pass on the incremental raw material prices to the end consumer. So right now it seems that this year all stars are aligned. we will be more positive on the discretionary consumer names rather than staples.
Okay, discretionary consumer names, that is where you're betting on. But with that, we have to let you go, Manoj. But thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisha. Pleasure talking.
All right, let's take a quick check of the markets. The market continue its positive momentum because Sensex is up about 138 points and Nifty is also above that 2598 levels. It is slipped below that 25,100 mark and it's above, however, it's above that 2598 levels. It's still testing that 25,100 levels at this point of time with about 0.1% gains. If you look at some of the sectoral gainers and movers, autos continue to be the star performer, metals as well doing well. If you look at pharma also flat in the positive territory. On the other hand, if you look at FMCG in the red with about 0.2% loss, Nifty Realty seeing a sharper cut of about 2% or so. But yes, the broader end of the markets, mid-caps and small caps, both of them continue to remain depressed at this point of time. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 like usual for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.